Well, the European Union has finally recognized that Russia is going to continue to use energy as a weapon. This is not the first time they've done this. This is the second time they've done this. And, the first time factories in Slovakia had to shut down. People's houses actually went cold in certain parts of the country. So, the impact is obvious, and the European Union has finally recognized that they have to develop energy resources within their own borders.
The war in Ukraine has caused major disruptions in the energy sector. What can be done to fix these disruptions, and what are the long-term ramifications of this war on the energy market? We're here to examine this issue with James Hill. He is the CEO of MCF Energy. We'll be talking about his company and the future of oil and gas. James, welcome to my show, The David Lim Report. Thank you for being here. Thank you for sponsoring this interview.
Good morning, David. How are you?
I'm doing very well. You were telling me offline about this crisis that the Ukraine war has caused. Let's give an overview for the audience. What exactly is this crisis in the energy market that not many investors may be familiar with?
Well, Europe has been dependent on supplies from gas and oil from Russia for decades now. And, this has really suppressed the search for energy resources within Europe itself. So, as Europe continued to basically depend more and more on Russian gas supplies, they became more and more potential victim of exactly what's going on right now. The war in Ukraine really has restricted the gas flow into Europe. And of course, the destruction of Nord Stream 1 and Nord Stream 2 will continue that restriction for, a very, very long time. Russia imported about 60 billion cubic meters of natural gas into Europe in 2022. And, that is a significant amount of energy that Europe relied on, not just to heat homes, but also for the industrial sector. So this is something that a lot of people don't realize, is that a lot of industries depend on not just oil, but especially natural gas for their energy demands. And now that Germany has shut down their last nuclear power plant, they have started to reactivate their 63 coal-fired power plants, doing exactly the opposite of really what the Green Party wants, which is, of course, to reduce carbon emissions. So really, the substitute fuel is natural gas, and that's the one that has really cut back emissions in the United States, where the United States has cut back their use of coal and substituted in natural gas because the U.S. has a very large natural gas supply.
Besides the U.S., which is one of the world's largest natural gas suppliers, if we can talk about that, Russia, of course, is a big natural gas supplier. China is a big player in the global natural gas market as a producer. Do you think that Europe will start shifting its dependence to China?
No, I think it's going to be the other way around. Right now, the gas price has fallen pretty dramatically because Europe has been able to reduce the impact of the production losses from Russia by importing natural gas from the U.S. in the form of LNG and Qatar. Those are big natural gas suppliers. China is actually a natural gas user. And part of the reason why those cargoes were available to go to Europe is because of the COVID lockdown that China has imposed upon their population, which had been severe. Now that China is starting to come out of their COVID lockdowns, the competition for those LNG cargoes are going to come into play. Of course, the warm winter that Europe had was also a major contributor in the fact that the energy usage was down from past years. So with China coming out of their COVID lockdown, and if they have any kind of normal winter in Europe, there's going to be some pretty significant shortages in energy in Europe in the coming year.
Before we talk about the geopolitics of the sector, I want to talk about the price itself. The natural gas, the price, as you know, has come down dramatically, and some would speculate that this is a signal for an economic slowdown. Others would say that it's simply a correction. from its highs, which was artificially pushed up by the war. Which camp are you in?
Well, I mean, the price went up artificially because of the war. There was no doubt about that. Plus, there was uncertainty as to where the gas supplies that were no longer coming from Russia, where they were going to come from. Once the market stabilized with the LNG coming in from the US and Qatar, the warm winter, which Europe was experiencing, and of course their cutbacks in energy usage. Once those factors came into play, then the price dropped from the tremendous highs that we saw down to much more reasonable levels. And of course, like I said, it depends on the winter and China's demand for natural gas as to where those prices are going to go.
I remember back in the late fall of 2022, analysts were calling for a potentially very cold winter, pun intended, for the Europeans because of where the natural gas price went. And this energy crisis could have affected a lot of middle-class people in Europe because it would have been unaffordable for a lot of households. Do you think this crisis has more or less been averted now because the prices come all the way back down?
Well, they've come down, which of course is helpful to everybody. But the last time I was in London, we had an individual come up to us at the pub and ask for a donation for his energy bill because he couldn't afford to keep his house warm. The idea is that it's really dependent on what's going on in the future as to where the prices are going to go. We at MCF Energy seems to think that they'll be stable and then, of course, rise as the demand for natural gas increases. The third world countries are starting to demand more and more energy. And, China, of course, is the gorilla in the room that, as they start to come out of their COVID lockdown, they're going to suck up more and more energy. And of course, that's competition for those LNG cargoes. And of course, will raise the price.
Like you said, Europe has been dependent, specifically Germany in particular, has been dependent on Russian natural gas for a long time. Is it a logistical problem that the U.S. could not have been their primary supplier of natural gas, or is it more political?
Well, it's basically a restriction on facilities. LNG cargoes require special offloading facilities, and they are present in Europe, but not in the demand that is required to meet their requirements. I mean, really, seriously, it's not something that you can just turn on and off. The facilities have to be available in order to offload the gas.
Okay, so give us a current situation right now. So after the Nord Stream pipeline was attacked, what are the options for delivering natural gas from Russia to Europe?
The major pipelines uniquely run through Ukraine, which of course is going to be a major problem moving forward. The destruction of Nord Stream 1 and 2 was pretty much a statement saying that if you're going to sell gas to Europe, you're going to have to pass it through Ukraine, which is a big reason why I don't think the prices are going to go down much, because Ukraine is going to demand some pretty significant reparations from Russia to rebuild their cities. And of course, they can get those reparations through tariffs on the natural gas coming through. But of course, that just means that the Europeans pay for it. So, from that standpoint, there's going to be some real complications in trying to get gas into Europe. And of course, this is one of the focuses of MCF Energy, is to develop the gas resources within the European borders to help mitigate that shortage.
Late last year, the European nations agreed to a price cap on natural gas. Can you tell us about that?
Well, price caps are a wonderful thing, but let's face it, they don't really work very well. There are ways around that, and I do believe that some of those are happening. And usually, if a country has a price cap of where they're selling, they usually try and go somewhere else to sell at a higher price. I mean, let's face it, it's a commodity and it's very fungible in the world economy. So I really can't speak to how well those price caps are working.
So the bottom line is the EU is currently dependent primarily on Russian natural gas. That's the problem that we're facing. If we can boil it down to that one sentence.
Well, they have been for decades. They've been dependent on Russian gas, and the Russians have been very astute in maintaining the price of natural gas at a level that really restricted development of Europe's own energy resources. And the fact that now the restriction is artificial due to the war only indicates to the European Union, which is now, by the way, declared natural gas green and a renewable resource, and the primary transition fuel to the transition to renewables, has really focused in on the idea that the resources within the European Union really do need to be developed. And that's the focus that MCF is trying to take right now.
What are the options for Europeans to produce their own natural gas? Are there any such options? Do they have the resources to do so?
Oh, there's some pretty significant prospects that we're currently involved with that we'll be drilling before the end of the year. Now, and these resources, if we find them, will not solve the problem by any means, but it will have an impact. And there's a large number of additional opportunities within Europe, both exploration and developmental, that could add significant gas to the system. And this is what we're trying to kind of bring together into a package is, these resources and these exploration prospects, which have gone undrilled because of the control which Russia has held over the market.
All right. Well, so you have currently large-scale projects in both Germany and Austria, correct?
Correct.
So walk us through your decision criteria for selecting those particular jurisdictions to conduct drilling.
It's called biggest bang for the buck. Basically, the projects that we're doing in Austria is a very large geologic structure called an anticline. The thing is so big you can see it from space. It covers 100 square kilometers. There's a well that was drilled in the area which produced natural gas at what would be very good economic rates. Right now, we're going to be stepping up structure to that and drilling in September of this year, and possibly proving up 500 billion cubic feet of natural gas. If I get lucky, it could be more. So we'll see. The German opportunities, we have many projects going on in Germany right now. One of them is a developmental prospect with 85 to 100 billion cubic feet of natural gas associated with nitrogen and helium. So we're looking very closely at that, possibly even converting the methane to blue hydrogen, which of course MCF supports the transition to renewables. And of course, we're focusing in on trying to meet the European Union goals.
Yeah, just on the note on renewables, we do know that the Germans in particular have an agenda or an objective to be fossil fuel independent, which means that they want to be completely renewable. They shut down their last three nuclear power plants because they were deemed, what the government thinks, that there would be a risk of accidents as well as bad for the environment. Do you think there is any such risk for the natural gas sector because they want to lean away from fossil fuels and so possibly shut down natural gas operations within Germany as well?
Well, remember that the European Union has declared natural gas green and a transition fuel. They've finally come to recognize that the transition to renewable energy is going to take decades. They've poured over €1 trillion into renewables and have only reduced the dependence on fossil fuels by 1%. This is according to a report by Goldman and Sachs. So, the idea is that this has taken years to do this, €1 trillion. So in order to get that other 99%, what's it going to take? It's going to take time and it's going to take a lot of money. And in the meantime, in order to heat homes and keep industries going, you're going to have a transition fuel, which is, quite frankly, natural gas.
How long do you estimate that your facilities or your deposits will be I guess, in production is my question.
Well, it depends on the size of the resource, of course. I mean, if you've got 1 trillion cubic feet of natural gas, it's going to take a while to produce it all. If you've got 10 billion cubic feet, it's going to take a lot less. The projects that we're looking at, of course, are on the larger side, usually 50 billion cubic feet or above. But the idea, of course, is that how many of these can you bring online and how quickly? We're looking at, probably a 5-year program or more in order to mature the assets that we currently have. And I believe that the European Union is being very supportive, especially the local governments. We've found in Austria and Germany have been quite supportive of our efforts and really want to kind of keep the energy within their own boundaries, if you know what I mean, because everybody's been hurt by these high natural gas prices. And, there's a real good chance they'll come back again.
Do the low natural gas prices I say low, relatively low. I mean, it's really just pre-war levels, Jim. The relatively low prices, does that provide any incentive for drillers like yourself to continue operations? I mean, don't you want the price to be higher, Jim?
Well, the price is higher, of course, increases your profitability. But you have to realize that low prices in Europe are still 3 to 4 times what we get in the U.S. So, low price is a relative term, if you know what I mean. And of course, the economics of any project are really what any company looks at, because, we're a for-profit company, which is going to give good returns to our shareholders. I mean, that's really my focus as the CEO of the company, is to increase shareholder value. And of course, we're going to do that by developing resources and providing them to meet the needs of the countries that we're in, and help provide some energy security.
Can you comment on the break-even price?
It's like I said, the price has stabilized and fallen mainly because of the warm winter which Europe experienced, the conservation measures that they put into place, and all the LNG that was able to be diverted into Europe from the U.S. and Qatar.
No, what I mean is, can you comment on the price of natural gas under which a company like MCF would be unprofitable?
No, because it depends on the expenditures for each individual project. Some projects are going to require a lot more money up front, and of course, a higher rate of return and a higher price. Others are much lower risk and don't require nearly as much capital, so our break-even point is much lower. So, what we've tried to do is to have a blend of, both high impact, high risk projects with lower risk, lower cost projects, so that it kind of sort of doesn't matter where the price goes.
Have investors asked you how you're changing your operations, or if you're changing your operations at all, or priority in operations in order to maintain margins in light of the price decline of natural gas?
We haven't done any significant changes in our operational philosophy. We're still out looking for high impact, high resource projects, and we think that this is a good plan.
Okay. Would there be a strategy for cutting costs, for example, if, let's suppose, the natural gas price which was on a downward trajectory, continues this trajectory?
Well, there's one thing about costs. The cost to drill a well. When the prices go down, the cost for services go down because the actual activity levels decrease. So all of your service providers, in light of the lower activity levels, lower their price so that there's more activity. This is a reaction that has been common throughout the industry for decades. So as the price decreases, cost of services will decrease and maintain the economics.
So walk us through your, I guess, 3 to 5 year plan on how to expand your current projects and get them up and running.
Well, MCF is really a company that's been in existence for about a year now. The management team is really a who's who of energy and mineral development people that have had many, many successful economic projects. We're utilizing the expertise of the highest technologies to lower the risk on our projects. We're going through and analyzing a lot of individual projects all the way from North Africa to the North Sea to as far east as Azerbaijan, as far west as Spain, looking at all the opportunities, which, like I said, have gone ignored for so many years. And we're selecting the best of those projects. We've got a 5-year window to get in and really make a major impact. And our goal is to make MCF Energy the kind of go-to company if you want to invest in European oil and gas exploration and development. We've already got, like I said, a number of high impact projects. We've got many more which are coming down the road. We've got additional concession applications in the works currently, and we'll be developing those in 2024. So it's going to be a wild ride for a couple of years, and we're going to have lots and lots of press releases.
Okay. So like we discussed, this reliance on Russian natural gas has been a problem for the Europeans, especially with the outbreak of the war. I have noticed with data that the EU is diversifying away from Russian natural gas. So there's been higher imports of U.S. natural gas, and there's been higher imports of Norwegian Russian natural gas, for example. What do you think the Europeans' long-term strategy is in terms of energy independence and or dependence on other allies?
Well, the European Union has finally recognized that Russia is going to continue to use energy as a weapon. This is not the first time they've done this. This is the second time they've done this. And, the first time factories in Slovakia had to shut down, people's houses actually went cold in certain parts of the country. So, the impact is obvious, and the European Union has finally recognized that they have to develop energy resources within their own borders. This is why even after the war is over, the pipelines are repaired, and the inflow from Russia comes back again, that there's still going to be a market for gas within the European Union because it's an energy security issue now. It's not just the price of the energy that we're looking at here. Europe has finally recognized that they have to diversify their energy mix, not just with LNG, because LNG is expensive. And also it has a much higher carbon footprint because you've got to transport it across the planet in order to get it to its point of use. Whereas resources within the country have a lower carbon footprint, they have a much lower price, and they have the security of not being affected by world politics.
They've had decades to do this, and my question is, why now? Is it solely because of the realization of what could happen if Russia were to weaponize this?
Well, they've been drunk on Russian gas for decades. And it's like I said, this is why they have ignored the resources within their own borders. So it's like I say, they finally realized with the second time Russia has done this, that this is going to be a continued problem if they don't develop their energy resources.
Is it also a cost issue that Russian natural gas is it's simply easier to import or cheaper to import Russian gas than it is to produce your own?
Well, it was very, very easy to import Russian gas. And it's like I said, Gazprom was very strategic in how they did their pricing. When I was developing in Europe 10 years ago, which was now I'm realizing 10 years too soon, because, the governments weren't nearly as much on our side. Gazprom actually paid protesters to come out and protest in front of government offices and whatnot against things like hydraulic fracturing and that sort of thing, which would have increased energy supplies in Europe by, multiple fold. They really do not want Europe independent of Russia. They don't want Europe even partially independent of Russian gas. Their main focus has been to control the market, and they've been very effective at it.
Is European natural gas a little bit more expensive to produce than Russian natural gas? And if so, would that translate to higher prices for the consumer?
Well, the nice thing about Europe is they've got a very nice pipeline network running over, quite a few of the countries. For instance, in Austria, the hookup to the pipeline from the well site is only 18 kilometers away. And that's the national grid pipeline where you can feed into the rest of Europe, actually. So there is infrastructure in Europe. It is present there. The price to produce is not going to be higher. The support of the local governments has made permitting costs much lower. And the thing is that it's the speed at which you can do things. It used to take years to get a permit to drill a well in Europe. Our partner company ADX in Austria just permitted and got a well drilled within 6 months. So there's been a dramatic change.
So then, bottom line, are you anticipating any significant and or noticeable changes for the consumers, the European consumers, in their energy bills because of this long-term transition?
I certainly hope so. I certainly hope so. We really want to be a contributor and be a good neighbor in the European countries that we're in, and we really do hope we can improve their lifestyle.
So what is the size of your operations again? So in your projects, how much natural gas is currently in your reserves?
Well, we haven't booked reserves. We've got potential reserves. We're looking at in fact, I shouldn't even quote the numbers because they need to be vetted by an independent analysis company. But I'm very pleased with our portfolio as we have it now. And like I said, there's going to be some pretty significant press releases coming out in the pretty near future.
When's your next drill result, James?
We plan to drill Austria in September of this year, and we'll have a second well going down in Germany in the fourth quarter as well. Both of those will be high impact wells.
Okay. And I guess generally my question would be how feasible would it be for the Europeans to stave away from Russian natural gas completely? Is that something they even want?
Boy, with the continued use, right now Russia has supplied in 2022 over 60 billion cubic meters of natural gas to Europe. That's a very, very large quantity. I don't think that we could hope to replace those reserves in country. So there's going to be an energy blend here. But it's, as I said, you really want to diversify your energy supplies and mix. And the more you've got within your own borders, the more secure your energy future will be.
Have you considered expanding your operations to other areas in Europe or perhaps even in the US?
We've actually looked at projects in North Africa because there are pipelines coming across the Med. And we've looked as far east as Azerbaijan. So yes, we've expanded out. We're still Eurocentric. We want to solve the problem, or at least help with the problem. And that's where our focus is right now. But of course, as the company grows, we'll be expanding out beyond Europe.
Do you think pipeline companies and exploration or energy producing companies should be vertically integrated?
I think that whatever makes sense business-wise is the way you should go. For instance, the pipeline companies, which are nearby several of our assets, are offering to build us lines. In other words, they will pay for the line up to the well site. So that's a cost that we don't anticipate in some areas because they're in such a need for natural gas that they're willing to come to us.
Is the government subsidizing part of your cost? I mean, presumably you're helping them.
Not yet. This is totally self-funded.
Okay, but do you anticipate that they will give you at least some tax exemptions, for example?
Well, we're looking at one of our assets for the conversion to blue hydrogen. If that comes to pass, then we expect to see some European Union subsidies for the production of hydrogen and, of course, the construction of the special lines which you need to transport hydrogen.
All right, well, finally, give us a bit of background on yourself and your background. I understand you are a geologist by trade, and then now you're working in a senior position at MCF. So tell us about your career development up till now.
Well, I started in the business over 45 years ago. and graduated with a master's degree in geology and went through the various training programs at the U.S. Geological Survey and also Chevron. Going independent after that, I learned a lot about the business environment, about land acquisition, concession applications, that sort of thing. Got involved with a number of successful public companies. The first one was Tartan Energy that we did a reverse merger into, and basically got bought out by one company for a significant amount of money. As a privately held company at that time, that was a good day for me. The second was Bankers Petroleum, which of course had a large asset in Albania. Who knew that one of the largest oil fields in Europe was in Albania? And we went in and developed that asset from 600 barrels a day up to almost 19,000 barrels a day before it was sold. The third asset was BNK Petroleum, which is now called Calibri. We made a discovery in Oklahoma and a shale prospect there, which is currently doing about 4,000 barrels a day. I retired from that company about, I think it was 2012. We were exploring extensively in Europe at that time, and the company made a decision at that point to pretty much stick with the Oklahoma assets because, like I said, 10 years ago was the wrong time to be exploring in Europe. It was too difficult. Russia was too active. They had too much power, and it just wasn't feasible. So at that point, I retired from BNK, and I came back into MCF because MCF Energy is backed by the same people, financial people, that built not just Bankers Petroleum and BNK Petroleum, but numerous other mineral and energy assets around the world. Very, very successful multi-billion-dollar companies. So I knew I had the backing behind me to get things done. And that was the only reason why I joined MCF, because I could see a real strong future here and a chance to really make an impact on the energy markets.
Are you able to comment on the primary or the largest shareholders? Is it mostly management team members of MCF, or is it institutional investors, funds, governments? You don't have to name specific names, but we'd like to know at least the types of investors involved.
Well, the names are out there in the public environment. Really, you can find those names publicly. Right now, MCF is, I'm told, held of over 70% by insiders. Frank Justra being one of the bigger ones, he holds over 10%. Gordon Keep, who's also in the environment, in the investment environment in Vancouver, holds significant shares and is an advisor to our board. Ford Nicholson, who has also been a real star in the energy world and done multi-billion-dollar deals, is also involved and is a founder with MCF. Those are some of the names. We've got General Wesley Clark as one of our board of directors. He brings an awful lot of experience in the European Union and dealing with European governments, and also gives a real impact and view as to the war currently going on in Ukraine and where that's going. So I've got a real dream team of management, and I've got a real dream team on the technology end of things. I've picked some of the strongest individuals in European geology and geophysics. I really feel we've got a bright future.
Okay. Well, yeah, you do have a very strong team. This is nothing to do with natural gas, but as a career veteran in the industry, I'm just curious as to what your reaction was when the fracking revolution took place. Certainly, you were around in the industry at the time. What did you think of this breakthrough?
Well, you got to realize something. The first successful well was hydraulically fractured in 1949. And this is a technology that's been around quite a while. It's been applied to shale. Normally, it was applied to tight sandstones for many, many years. But it was applied to shale, back around 2008. when Mitchell Energy first started doing their first work in the Barnett Shale. And at Chevron, I actually participated in hydraulically fracturing my first well in 1979. It's like I said, the technology has been around for a long time, and it's matured and it has expanded, and each individual shale play is unique in that how you stimulate it and how you produce it is unique to that particular type of rock. Everybody thinks of shale as a very tight rock and homogeneous, but it's really not. It varies dramatically around the planet. So yes, the revolution is there. It's contributed huge reserves, absolutely huge reserves. And now, because of hydraulics fracturing stimulation, the U.S. has a natural gas supply of probably 200 years at current usage. So it really has been a major impact.
Would you go as far as to make or support this statement, which is that fracking itself has really elevated America's geopolitical power in the global arena?
Yeah, that hydraulic fracturing has basically made the U.S. energy independent. We before the current administration, we were energy independent, and we're close now. But it's not just hydraulic fracturing that's done that. It's also the drilling technology of drilling horizontal wells. We can take a well from vertical to horizontal, meaning drilling actually flat, within about 50 feet. I mean, the technology has really advanced. And what horizontal drilling does is it opens up the reservoir. It opens up the amount of surface area that you can draw on to produce the fluids and the gas within the reservoir. So the more surface area you can expose, the higher your rates are. So in a lot of cases, just the horizontal well alone will be economic. But when you hydraulically fracture it and open up even more surface area, that's when you see these extremely high rates.
Do you think that this is probably just a theory, but do you think that the U.S. being more energy independent has forced OPEC to rely on other trading partners, thus reducing the American influence on the Middle East? For example, OPEC now is trading more with China. It's stepping away from the petrodollar. And so over time, we'll see a diminishing of the power of the dollar precisely because of this independence, which is a little bit ironic. Could you make that assumption?
Well, the switching of moving away from petrodollars, which of course oil and gas has always been priced in U.S. dollars for many decades, is a reflection of not just U.S. energy independence and the fact that we're actually a competitor with OPEC on exporting to like the European markets, but it's also the reduction in value of the dollar. The inflationary impact, which the current situation has had, is impacts anybody that holds dollars. So, the fact that the value of our money is decreasing at, between 5 to 10% a year, is impactful to somebody who holds $100 billion in US currency. So, until we can stabilize, the inflation rate in the US, we're going to see probably a move away from the US dollar into a more stable currency, assuming there is one out there. I mean, that's the thing. There's geopolitics going on here. To kind of threaten the U.S. to say, "Hey, we're moving away from dollars." But again, I think that's political in nature. I don't think that there's a more stable currency out there. Certainly, the ruble isn't. The yuan isn't. So again, it's a combination of politics and the fact that inflation is reducing the value of the dollar that's causing these changes in my viewpoint.
Final question: what is the future of energy in not just America, but around the world? I mean, certainly in the US, we've seen politicians take the stance of wanting to make energy greener. We've even gone as far as to see government officials wanting the military to be completely EV in their fleet by 2035, which is to say that they want all the vehicles in the U.S. military to be electric and not dependent on fossil fuels. Is this even possible?
I don't think it's possible. The amount of mineral resources that are required to go EV is significant. Cobalt, lithium, nickel, these are all commodities. And of course, there's a limited amount of those. And especially since a lot of cobalt comes from African mines, and the fact that the technology to mine that is so human intensive. The more you try and use it, the more demand there's going to be, and the higher the price is going to go. Until there's a real breakthrough in storage technology, where you're storing enough energy to actually drive a vehicle for a day, especially with the military. You don't want your military vehicles running out of energy in the middle of a battle. That would be a bad day. That would be a very bad day, especially for the guy in the tank.
Yeah, they'd have to have tanks with solar panels or something. But all right. But for the civilians though, you don't think we're going to go 100% electric on the road? There's always going to be a mix.
It'll be difficult. I mean, for decades, there will be gas powered cars out there for decades. It's, as I said, the transition to renewables is going to take a long time.
Well, I mean, a lot of states, I mean, the UK, for example, New York, I believe California, they've banned the selling of petrol cars after 2035. I don't know how that's going to be enforced, James.
Well, exactly. And, that's really going to just make the price of used cars go up dramatically. Those cars that still use gasoline. Hopefully there'll be a breakthrough in storage technology. In battery technology, because right now it's just not in the cards. I don't think it's going to happen. There's only so much wind power and only so much solar power you can use. But when the wind doesn't blow and the sun doesn't shine, you aren't generating any power.
Yeah, absolutely. Well, James, this is very informative. It's been a very enlightening interview. I wish you the best of luck with your current projects in Europe, and we'll follow up again soon. Thank you very much.
All right. Thank you very much for your time, David.
Thank you for your time, and thank you for watching the David Lynn Report. Stay tuned for more, and don't forget to subscribe.